Let's talk to Craig Erlam. He's Senior Market Analyst at OANDA. Very good morning to you, young Craig.
Good morning.
Right, the Evening Standard last night gave me and probably all the people who read that newspaper the EBGBs, highlighting Brexit, unresolved US-China trade war, Saudi Arabia and the relationship with the West, the EU-Italian budget dispute, amongst other things that we could talk about, Mr. Trump and the likes. How does it feel? What's the tone of the sort of trading rooms at the moment for you?
Yeah, it's quite interesting because it's not new. It's something we've been talking about for quite a while. There's been huge amounts of underlying risk in the markets. There's been numerous situations that threaten to destabilise countries or destabilise regions or just simply destabilise the markets. And yet we continue to have scaled record highs in the US in particular, but even the likes of Europe and others prior to earlier on this year seem to have done pretty well. It seems to be this trade wars component seems to have really rattled the likes of Asia. So we're looking at emerging markets, China, higher interest rates seems to have caused some instability as well. And now the Italy situation, Brexit in Europe seems to be starting to tipple over. So now we find ourselves in a situation where investors are really showing serious signs of anxiety. Whether that has the potential to cause more destabilisation and more drastic moves, we'll have to wait and see, but we're certainly seeing signs of that overflowing.
Understood. Well, I did read an interesting statistic this morning. Apparently, UK investors have pulled out £9 billion worth of funds investing in British companies since the Brexit referendum. Right, we've got a couple of slides to whiz through. Let's kick off with the gold daily chart. Is gold coming alive because of the uncertainty and the volatility in the markets?
Well, this is the interesting thing with gold is, like I say, it's been quite a year, I think, for financial markets, it's safe to say. And gold has not necessarily performed too well. We saw it drift back below $1,200. We seem to have nipped back above here again. And the interesting thing with gold, as you can see on the chart in front of you, is it tends to move in these $20 clips. So when it got through 1200, 1220, we stabilised, we moved through 1240, and we just seem to be reliving these patterns again. We did the same on the way down. But the interesting thing with gold is in recent weeks, we are starting to see it come to life again as this safe haven asset, which it's historically been, but hasn't necessarily shown signs of for most of this year.
Understood. Okay, well, we've got this second slide, okay, and you've got gold versus the S&P. Clearly, there's some sort of correlation in recent price action, or the inverse correlation, I should say.
Exactly, yeah. I mean, this has been the interesting thing. We've seen plenty of risk aversion in the markets, whether we're looking at Asia and China in particular since the start of the year, since the trade wars ramped up. We've seen the Shanghai Composite drop around 30% in that time. We look across to Europe and it really kicked off, it seems, earlier in the summer and even maybe towards the mid part of the summer in the likes of Germany when the data started to be unsettling. And throughout this time, gold continued to slip, or at least stabilise below those $1,200. So people were starting to question just how big a safe haven gold now is. Are we seeing the same thing, or is the dollar more of a preferred safe haven? Are we seeing higher yields in the US, which is making treasuries the preferred safe haven? But I think what we can see from this chart quite clearly is that as long as the US stock market continues to perform well, gold is not seen as the preferred safe haven, because as soon as the bill came due in the US, which came, like I say, a lot later than everywhere else, and we saw the S&P, the Dow, the NASDAQ start to make serious declines, gold found its form as a safe haven once again. We saw it break through 1200 back to the levels where we are now.
Well, I saw a recent comment, gold is old, okay, and apparently everything is now Bitcoin, and this is the basically the trade to do if everything gets a bit wobbly. Would you concur with that?
I think that's absolute nonsense, to be honest, quite at this moment in time. I've heard that a lot, and maybe at some point in the future that can be the case. But right now we've got no evidence of that. All we have to do is look at the stock market sell-off. We saw a couple of weeks ago, we saw massive declines in the US, Europe and Asia, and we also saw massive declines in Bitcoin as well. So there was no evidence that we were seeing safe haven status there. We've seen big declines yesterday. Bitcoin barely moved. So we're not really seeing any evidence. I think this is one of the hopeful aspects of Bitcoin, and maybe some of the early adopters, some of the bigger Bitcoin enthusiasts are really trying to upsell Bitcoin as gold 2.0, but I think at the moment that's more of a wish and a fantasy for those who are holding it as opposed to anything that's embedded in reality.
Craig, on that note, thank you very much indeed for your time. That's Craig Erlam from OANDA.